10 passive income ideas that will make you rich, presented by 40inbox.com, where you can learn how to master your money. So number 1, dividend stocks. Dividend stocks are tried and a true way to earn passive income. You have to do plenty of research to find good stocks and invest a significant amount of money to receive large dividend checks. However, if you consistently invest money into dividend stocks, you can amass a nice residual income over time. For any of these investment opportunities, make sure you open an account at the best online brokerage and get rewards while doing it. There's many out there. You could pick from any of them. You could also join Robinhood down below in the description of this episode. And you could literally just automatically every week or every day or every month on the exact same day invest a certain amount of money into dividend stocks on an automated basis. You could just literally set that up and just have it on autopilot. Number 2, rental properties. A cash flowing rental property is a fantastic way to bring in a monthly income. To make this truly passive, you can outsource the running of the properties to a management company. However, the internet has made investing in rental properties easier than ever before. There are a lot of ways you can invest in rental properties depending on what your goals and interests are. You can be a limited partner in a large residential or commercial properties, or you can buy homes and be a landlord or do this all online. Number 3, a high yield savings accounts and or money market funds. So if you don't want to think much about your money but want it to work for you, a basic place to put it is in a high yield savings account or money market fund. The difference is in the account type and where it's located. Typically, high yield savings accounts are located at banks and are FDIC insured. Money market funds can be located at both banks and investment companies and are only sometimes FDIC insured. Interest rates have been rising, so putting more money into a savings account can generate a safe passive income stream. Number 4, CD ladders. Building a CD ladder requires buying CDs, or certificates of deposits, from banks in certain increments so that you can earn a higher return on your money. CDs are offered by banks, and since they are a low-risk investment, they also yield a low return. This is a good option for the risk-averse. For example, what you do if you want a 5-year CD ladder is you do the following. Look how the rates rise over different time periods, and these are just estimated. 1-year CD is 2.50%, 2-year CD 2.90%, 3-year CD 3.05%, 4-year CD 3.10%, 5-year CD 3.15%, and if building a CD ladder sounds complicated, you can also stick to a traditional high-yield savings account or money market fund. While the returns aren't as amazing as other things on this list, it's better than nothing and is truly passive income. That being said, I would more so go with like a high-yield savings account and just stick basically like an emergency fund in there to just have that slightly grow. Because you have like, if a high yield interest account just gives you like 1%, 1.6% better than like a local bank, I'd actually be happy with that, because your emergency fund is supposed to be super liquid so that you could just literally deal with whatever it is that you need to deal with. Number 5, annuities. Annuities are an insurance product that you pay for but can then provide you passive income for life in the form of monthly payments. The terms with annuities vary and are not always a great deal, so it's best to talk to a trusted financial advisor if you're interested in purchasing an annuity. These investments aren't for everyone. They can come with high fees and not be worth it. And honestly, I wouldn't really consider this much of a investment because for the most part, you're actually losing money. But if you have zero risk tolerance for loss and are looking for a somewhat passive income stream, this could be a good potential idea for your portfolio. But again, honestly, we cannot recommend this because typically annuities are situations where you're basically paying a premium to lose money, basically. So basically, you're cutting them a bigger check so that they could give you a smaller check every month. Number 6, invest automatically in the stock market. If you're not interested in picking dividend paying stocks, and I can understand that, there are still ways to invest passively in the stock market. You can automatically invest in various ways through what's called a robo-advisor. A robo-advisor is just like what it sounds like, a robotic financial advisor. You spend about 10 minutes answering a few questions and setting up your account, and the system will take it from there. An example is Acorns, which you can check out in the description, and basically every time you spend money, you're actually automatically investing into the stock market. And depending on your risk, which you could just set up automatically, just pick which one, higher risk, mid risk, no risk, and they'll automatically put your money into certain investments automatically every time you spend money. And you can also just automatically put money into it on like a daily, weekly, monthly basis. You can also do the same thing similar to that in Robinhood. Number 7, invest in a REIT, real estate investment trust. If you're concerned about investing directly in real estate, or maybe you're not yet an accredited investor, that's okay. You can still take advantage of real estate in your investments through REITs, real estate investment trusts. These are investment vehicles that hold property within them, and you as the owner get to benefit from the gains, refinances, sale, income, or loss on the property. Number 8, invest in a business. Another way to generate passive income is to invest and be a silent partner in a business. This is very risky, but with risk comes the potential for higher returns. For example, several years ago, both Lyft and Uber were looking for private investors to invest in their companies. Today, they are worth billions, but you as an investor would only reap that benefit if they go public via an IPO or get acquired, so it's risky. But there are ways to reduce your risk. For example, you can invest small amounts in many companies through lending them money in small bonds. Number 9, refinance your mortgage. This may sound strange in a passive income article, but refinancing your mortgage can be a great way to free up a lot of income and save you hundreds of thousands of dollars over the life of your loan. That's a pretty good gain in my book. Right now, interest rates are still near historic lows, and if you haven't checked out your mortgage lately, now's a great time to shop around and compare rates. If you can save 0.50% or more on your loan, you're potentially adding tens of thousands of dollars back into your pocket, depending on the length of your loan. Not many investments can beat that. Number 10, pay off or reduce debt. Along the same lines as refinancing your mortgage, if you can pay off or reduce your debt, you're making huge progress in building income. But just like other things in this topic, it takes a monetary investment to make that happen. The great thing about paying off debt is that it's a straight return. If you have a credit card at 10% interest, paying it off is a 10% return on your money. That's huge. There's 2 approaches you can take with debt: refinance or consolidate, or balance transfer and pay down. Watch more personal finance lessons episodes, or listen to more as well. And check out 14bucks.com to master your money.